Hello and welcome everyone to another segment of All Things Real Estate. And today, as always, I am Kyle Seyboth with Keller Williams Realty. I serve Rhode Island and Massachusetts, commercial and residential real estate. And I am here, as always, with a special guest. Today I have no other than Donald Miller with Nations Lending. Donald, thank you so much for coming on the show.
Thank you very much.
And what we normally do here is we kind of just, with the guests, we go over what they do, what their profession is, what type of people they help, how they relate to my business, how we work together, and what their goals are kind of going forward. So with that, right, Donald, let me just explain, Don, what firm are you with and what do you do?
All right, so I am a personal mortgage advisor, a loan originator with Nations Lending. So, we are the ones who work directly with the borrowers and get them pre-approved to be able to go out with you to find a house.
So, Nations Lending, first and foremost, my first question about that, where is your branch or where are your branches or where do you work from?
Okay, so we're a national organization. We are in 48 different states. I personally work in the office based out of Cranston as well as up in Lincoln. So we are in-house lender with Keller Williams Leading Edge.
Perfect.
So we've got that, but the main branch is in Cranston.
Okay, so you have an office in Cranston. You work out of the Keller Williams in Lincoln, right? How many loan officers are in the Cranston office?
I think roughly 12 to 15. Ken Ferranti is our branch manager, so he's my boss, and he's always looking for good quality people and growing the business. He's actually opening up a branch here in Seekonk.
Oh, great. So Nations Lending is coming to Seekonk, so that's fantastic. So you'll get a presence in Mass.
Yes.
So Don, where do you live?
I personally live in Lincoln.
In Lincoln?
Yeah,
so that's great. So that Lincoln office is perfect for you.
Yeah, that works out very nicely. It's like 5 minutes, not even.
Get out of here.
Yeah, easy.
Oh, that's perfect.
Yeah.
So you work out of the Lincoln office, and what that means is, to explain to people, is that a lot of real estate companies, realtor firms or companies, have what they call an in-house lender. Right? So the preferred lender for Keller Williams in Lincoln would be Nations Lending. And that's where you come in, and either you or a couple other folks are in that office at all times.
That's
right?
correct.
So you guys are there. So the beauty of that is if someone works with a realtor out of that office in Lincoln and they need to get approved, boom, across the hall is Nations Lending. They can just go over there and get approved.
Right.
Do you guys have a physical space in that office?
We do, yeah. So right off to the side when you come in the main entrance, we're just off to the right-hand side there. So we're on the same floor as the actual Keller Williams office.
Great.
But our own separate space with locked door and keypad and everything like that.
Good, so you have your own so you can tell I don't go there that often.
Yeah, I've seen you a bit, but
I go like once probably a month.
You're pretty busy.
Yeah, so I have my own office, obviously, in Seekonk, which is good. It helps my folks out. My support staff is over there, so that's been helpful just to kind of keep my stuff separated.
Right.
So good. So we've had a few lenders on, and really to make this very simple, right? What is a lender? What is the difference between a mortgage broker, a bank, a lender, a mortgage originator? Like, can you just simplify that? Like, treat me like a 5-year-old and explain to me the difference between what you do and what someone at Bank of America does or someone at Pawtucket Credit Union does, so we can explain that to the listeners so they can understand why to use or why not to use a mortgage broker.
Right. Well, we're not a broker. We are a direct lender.
Okay,
so we're the bank.
You're not a broker, so you guys are a direct lender.
Yeah.
Okay, perfect. So what's that mean?
So that means we are the ones who finance the loans. We are the ones, and in our case, we actually keep 97% of our loans and service them. So I think that sets us apart a lot, A lot of people don't realize that when they go through the mortgage process, often once the bank closes, they sell the loan.
Of course.
Because they'll make the money from the closing, and then they don't have the risk. They unload the loan. But we don't. We keep them and we service them, 97% of them. So as a direct lender, we are the bank. And I serve the role as a loan originator. I am the first point of contact for somebody who's coming in, who's inquiring about buying a home. Ken, once again, he's the branch manager. He does a lot of marketing too. So we get leads, virtual leads coming through, the internet. We follow up on those, and then we are able to get those people pre-approved. Or working with realtors, we'll get referrals. We'll get some borrowers, clients they're working with that need to get pre-approved. And as you continue to stay on in the business, you start to get borrower referrals. If you do a good job by somebody and you build that relationship, they're going to refer somebody to you. So those people will come to me and they will start the process by completing an application, checking credit, getting all their documentation together, and that's where we reach the pre-approval stage. Something I think that's really important is some people talk about pre-quals. Well, pre-quals, the term, actually is not necessarily supported with documentation.
So stop for 1 second, right?
Sorry.
So pre-qualification.
Yeah.
Right, so there's a pre-qualification,
Yep.
and then there's a pre-approval. Keep going.
Yeah, so pre-qualification means I check somebody's credit, I listen to them on the phone, they told me what their income was, I can see what their debts are from their credit, I can see their credit score, and from what they've told me, they have a 2-year work history. Okay, we could pre-qualify you for a certain amount. That's not what you're looking for really, and you know as a realtor, you want pre-approvals. You want to know that somebody on my end has done their homework and gathered the documents, the W-2s, the pay stubs, the license and social security, making sure that there's money in the bank for down payment and closing costs. So that's the pre-approval. That's a verification of everything that we hear from a borrower.
So if I'm a buyer, first-time buyer, I've never done this, I'm wicked nervous, I don't know what to do. I call Don, I say, Don, I need your help, right?
Yep.
And I'm so nervous. You want to pull my credit. And I say, Don, is this a hard pull or a soft pull?
Hard pull.
It's a hard pull.
Yep.
And then I say, okay, Don, a hard pull. My mom told me that if I do a hard pull, it's going to hurt my credit.
Yep.
What is the what's the reality of that?
So you have to do a hard pull in order to see if a person is eligible. That's the first step in the process.
Right.
So it's a minimal impact on somebody's credit score, 1 to 5 points, but it is not, it's a necessary pull. It's a necessary requirement of a loan process,
Right.
first step. But in order for any bank to offer a mortgage to somebody, they got to see if they qualify. So it's not going to destroy somebody's credit as some people believe. There are other things that destroy people's credits. One of the things in particular that I often warn people against is when they go out shopping for a car, they go to a car dealership, the car dealership will put out their information to 5, 6 different
Right.
banks they work with.
And
They
it's
do
gonna
a
pull.
shotgun pull.
Yeah.
Each time they're getting pulled, they're getting hit.
Right.
In the mortgage industry, that first pull hits you 1 to 5 points. After that, you have about a 30 to 45 day window to actually get your credit pulled because they want people to be able to know and look around and know that they're getting a good deal.
All right, so that's really, really good advice,
Yep.
right? So I work with buyers a lot, and I work with first-time buyers a lot. And literally they will say to me, well, my mom or my grandmother or my uncle or my sister said, I don't want to pull my credit, it's going to really impact my score.
Yeah.
And my response always is, it's going to be minimal, right? Now to educate them and say, look, it's probably only going to be 1 to 5 points.
Yep.
It's not a big deal,
Yeah.
right? It's really not a big deal. So that's something good that people need to know.
Yep.
And that should, if you're worried that much about your credit score, 1 to 5 points getting hit, then we've got bigger issues.
Right.
Right? Then we need to rebuild your credit, and it may not be time for you to buy a property.
You mentioned rebuilding credit, so that's
Right.
an important piece.
Right.
If I can't pull somebody's credit, I don't know where they stand, I can't give them the guidance it takes to get their credit score up.
Right.
I actually have access to a credit simulator that we will run for free for borrowers that we're working with, and then tell them you need to pay down this card, you need to do this, maybe you need to open up a secured credit card, get on as an authorized user with somebody. Different ways that we're going to be able to help them improve their score to either become eligible or put themselves in a position to get a better rate.
Right. So the credit simulator, that's pretty good. So what that does, basically the person comes in, their credit's too low. If you do this, this, and that, your credit goes from a 520 to a 580.
Right.
And then if you do the following things, we're going to get you to 640.
Right.
And then you should be able to know the timeline on that because you'll
Exactly.
know as the buyer or the borrower how fast you can do these things.
Right.
Right?
Yeah.
Good.
We'll give them the guidance, and then we can do one of two things. We can wait until it reports, and then we can pull credit again if we choose, or we can do what's called a rapid rescore.
Right.
So if somebody pays off 2 credit cards, gets a letter from those 2 credit card companies, gives it to us, Ken, my branch manager, will send that in for a credit rescore.
Yeah.
And then through Credit Plus, which is the company we use, we're going to get a credit rescore based on those 2 new trade lines, and that's the score the person will have, so we can qualify them then.
So I want to buy a house.
Yep.
And I want to use either FHA, which we've talked about in the past in the show, which is 3.5% down.
Correct.
And or I'd like to use Mass or Rhode Island housing.
Yep.
100% financing,
Yep.
right? What credit score do I need for either? Is it the same score? Is it a different score? Is it higher? Is it lower? What do I need to look for if I'm a buyer?
All right. So if you're going FHA, the minimum credit score that we go by is a 580. We don't have any overlays at Nations Lending. So we don't have any extra protections that keep people from getting an FHA loan with us. We'll go down to the 580. If you're talking about mass housing, if you're talking about Rhode Island housing, there are higher requirements for those. Rhode Island housing, and we do both. We are a lender for both mass housing and Rhode Island housing. Mass housing, 640 minimum credit score. Rhode Island housing, 620 minimum credit score. Rhode Island housing has a $12,000 second loan program that you can get that you need to have a 620 credit score for. But they also have a spring 7,500. And that one is a $7,500 towards down payment only. You need to have a 660 credit score. Both of those loans require that that be paid back. It's not free money. There's no more free money there. The $7,500 though is not a monthly debt against you. It only gets paid back at the conclusion of the loan or if you refinance or sell the property. Whereas the $12,000 from Rhode Island Housing is a second loan that you're paid back over 15 years. You're hit monthly for it, and it's at the same rate that you get your first loan with us at. Whereas Mass Housing, they have up to $15,000 that you can get, and it's a 2% rate that you're paying back on. So
that's good. So first-time buyer, Massachusetts, I can purchase, no money down. No closing costs. Everything rolled into my mortgage.
Yep.
So why, if I have a 660, if I have a good job, why would I rent? If I can buy for no money down and keep my mortgage the same way, I think people need to be educated on this. I think there's not enough education out there for the millennials and for the younger folks that don't understand what really needs to be done to purchase a property. I still meet people daily that say, oh, I don't have the 20%, I can't buy a house. If we waited for 20%, there'd be no houses sold. We would sell 0 houses. I can't tell you the last 20% loan I did. I don't think I've done one in 6 months. Besides an investor that's cash or someone that's like a regular person buying a regular house, I don't think I've done one in 6 months.
There are so many programs out there for people right now. You can put down 0%, either using Mass Housing, Rhode Island Housing. Or you can also do USDA.
USDA.
So USDA, and I'm doing one presently right now for somebody, and in this particular situation, it's in a condo. This condo is USDA and FHA approved. That doesn't happen a lot, as you know. Condos aren't always FHA approved, but for this person, it just so happens. USDA is another program that is a zero down program. The United States Department of Agriculture has a program. They try to encourage people to move to rural areas. It's not for urban communities. It's not eligible in those communities, but much of Rhode Island and a large portion of Massachusetts, outside of the Boston, the Worcester, the Springfield, and stuff like that, are eligible for USDA loans, zero down. Anybody can get them. You need a 620 credit score for that, and there's an income limit. You can't earn above a certain amount. So what I'm working on right now is a $91,000 income limit in Rhode Island. So that person is eligible because they make just under it.
One person?
One person.
So if it's 2 persons, what's the income limit?
It increases as the amount of the family increases, and anybody over the age of 18 is counted. So that's a tricky thing too, because say you have a child who's 18 that just works at McDonald's. They will calculate that income. They're going to want to see that. So anybody living in the house is going to be calculated in that income. And it increases, and specifically to Mass and Rhode Island, it varies, but we just look it up and we find what that number is and give the guidance.
So USDA, right? So let's talk about USDA. So USDA, do you have to pay PMI still?
There's a small portion that you have to pay on that.
Is the PMI on USDA the same? What PMI is, when you don't put down 20%, guys, right? When you don't put down 20%, you get charged mortgage insurance, right? What is that? What does that mean? Basically, the bank needs to protect itself. If you ever foreclose or have to get foreclosed upon, there needs to be some money in the kitty or the under the mattress that they can utilize to help kind of offset that. Right. So that PMI is a percentage of the loan. Right, on an FHA loan. It's a percentage of the loan on Rhode Island Housing. It's a percentage of the loan on USDA. What are the percentages on FHA, Rhode Island Housing, conventional, and USDA? Anything under 20%.
So we'll start with FHA. That is the most popular program that we utilize, and the percent is 0.85. If you put 3.5% down, you're going to be paying a monthly PMI of 0.85%. If you put down 5% or more, which you can put down more if you choose,
So
then it becomes
stop for a minute. 0.85 of what?
0.85% of the actual monthly
So if
payment.
I buy the monthly payment.
Yeah.
So if I buy a house for 100,000,
Yeah.
it's not 0.85 of the 100.
Right.
Or is it?
No.
No, it's 0.85 of the monthly payment.
Yeah.
So the monthly payment with principal and interest and tax and insurance.
Yeah.
So that monthly payment, we take 0.85 of that.
Not the tax and the insurance.
Just
though.
the principal and
Yeah,
interest.
Principal and
so
interest.
the P&I is the principal and interest, 0.85 of that.
Yep.
You add that on, and that's your PMI.
Right.
For
That's-
FHA.
yes,
Simple math.
FHA.
Boom, there's FHA.
Yep.
Conventional 5% down.
Conventional is going to change. It's going to vary based on the
How much
person's
you put
credit
down?
score.
Oh,
well,
credit score.
It depends. Yeah, it depends on the risk associated with the borrower.
Yeah.
Right. So it becomes how much are you putting down. Obviously, you put 20% down, there isn't any, but the lower amount that you put down. And so we do conventional programs where you can put as little as 3% down.
Yeah.
Home Ready and Home Possible programs, somebody can put 3% down. So the PMI that you're going to pay for 3% down is going to be a little bit higher than the PMI you'd pay for 5% down.
Right, as the
and
percent-
then 10% down.
Right, so as the percent you put down goes up, the PMI goes down. So they work inversely.
Right, and credit score can impact that. If somebody has like an 800 credit score, their PMI is going to be lower than somebody who's like a 620, 640 credit score.
Of course, right, because the risk is lower. So
Yeah.
there's a lower risk there. Now, USDA,
0.35.
0.35. That's minimal.
Yeah,
That's
very low.
That's
Yeah.
really low.
It's a great program.
Yeah, that's really, really good. And now the last loan that we've spoke about in the past is VA.
Yeah,
VA has none.
none.
No PMI.
They just have a funding fee.
So if you're a veteran, you have, but that is similar, right? The funding?
Yeah, so back to the FHA, there's an upfront mortgage insurance that you have to pay on an FHA loan as well.
Yeah.
Right, 1.75% of the total loan amount.
Yeah.
All right, so that gets added in the front.
Yeah.
And it's added to the loan. It's not considered part of your closing costs, but it increases the loan
amount.
size.
Yeah.
Right. So back to the VA, you have a funding fee. The funding fee is going to be 2.15%, and that's actually changing here in 2020. But back in 2019, 2.15% for first-time user, 3.3% for somebody who's using it a second time around.
Okay.
You can use a VA loan more than once.
Yeah, and I've heard this, and this may be not correct. If I'm approved by the VA for $400,000, and I buy one house for $200,000, and I live there, and I say I want to move but rent that, they'll give me $200 to buy the next one.
Yeah, you can use a VA loan
Right?
in two different
You can
instances.
use it on two houses.
Yeah.
So I was working with buyers, and they were like, "Yeah, no, my thing is $300. I'm going to buy one for $150 and another for $150."
Right.
That's crazy.
You're allocated a certain amount of eligibility, and so
Yeah.
as you use up that eligibility, that's when it runs out. So that's why you can do it a second time around if you still have some funds left
That's
available.
fantastic.
Yeah.
Think about that. So anyone that was a veteran, right? Whether it's the Army, the Navy, the Coast Guard, whatever, right?
Yep.
Not reserves, though, right?
Yeah, reserves and active duty.
Really?
Active duty can actually get it after 4 years. You have to have 4 years.
That's great. That's fantastic.
Yeah, so it can
What a
be
good
regular
program.
military, National Guard, stuff
So
like that.
National Guard. If I went to if I was in the National Guard, I would be eligible. Wow. Even if I only did weekends.
Yeah, after 4 years, after you put in
Wow.
your 4 years
4
of
years.
eligibility.
Good. That's awesome.
Yeah.
So kind of transition into another kind of avenue in real estate. So Don, what are your predictions for 2020? Everyone I've had on the show, I've asked.
Yep.
What do you think? Where are we at? Where are we going?
So it's an election year.
Right.
And I don't know that there's going to be a lot of major changes happening because it's an election year. I think that we're probably going to stay pretty much level. A good sign, I actually just was reading a report this morning, the October report, the housing report that came out. It showed that the delinquency rate on mortgages is the lowest it's been in 20 years. 3.7% delinquency. And what that denotes is people who are late on their mortgage payments. Only 3.7% of people nationwide are late on their mortgage payments. And as I said, I think it spiked back in 2010, was the highest at 11.5%, but we're at the lowest we've been in 20 years. So that's a good sign. Serious delinquency, 90 days and more, that's also at the lowest it's ever been. Or not, I shouldn't say ever been, in 14 years. So I think that's a good sign that we are in a healthy economy and people are making their mortgage payments. I think when you start to see people go late on all those things, that's when you should really start to get worried that we're in for something not good.
Yeah, right.
Recession or so.
So your thoughts are status quo?
I think so, yeah. I
Status
think we'll
quo.
see, I think through the election, and the election, of course, is going to be a driving factor, and people will be looking to that to see
what happens,
who's the
wins.
president, and what changes.
I think if the incumbent stays, I don't think we see much of a change.
No.
I think you're in for another 4 years of what we had. I wouldn't say that. I think you're in for 2.5 years of what you had. Because once you get to that 1.5 year mark.
Right, the lame duck type thing.
Correct.
Right,
It's
yeah.
a lame duck, and then, it's uncertainty steps in again.
Sure.
And once uncertainty comes into the picture, people panic.
Yeah.
And once panic comes in, people start to tighten the belt a little bit.
Right.
So I think you'll see people start to tighten the belt in 1.5 years. My prediction has been for a while, we have 18 more months where we're at. And that's where I'm at right now. Starting this year, the January for me has been probably my best January ever.
Awesome.
In 9 years.
Yeah.
As far as meeting new buyers, meeting new sellers, working with investors that flip, working with investors that buy and hold, anything and anyone.
Yep.
I've had, knock on wood, I've had a really, really good first few weeks here.
Awesome.
And I think that's going to transition nicely into a full year.
Yeah, I'm looking very positive as well. My January, so just quick background for me, I was an educator. I was an educator for 22 years, high school principal for 15 years, right? So
yeah, you weren't just an educator, you were the principal.
I was the principal.
You were the guy.
Yeah, I'm the principal lender, right?
Yeah, that's the slogan,
That's the
right?
moniker I use.
That's
yeah,
right.
yeah. So
That's right.
it's a cute little twist there, but I like it. I like the fact that I've been able to help students. I've been able to help students, former students, get houses. And I've some former students that I'm actually working with who are realtors.
Yeah.
It's a pretty awesome experience. But back to that, I've been in the business 2 years. 2 years in the business after coming from education, and I find as an educator that I had the skill set that was necessary to be successful in this business.
Absolutely.
I think we need people skills, we need communication skills, and we need a kind of a competitive drive that's within, individually, to be able to succeed in this. You work hard, you're going to be able to reap the benefits of that, and you're going to be able to help a lot of people. So I've been fortunate. So back to that, my January last year wasn't so great, right? That was my first January. I started in December, so March.
Yeah.
March was my first closings of that year. So March of 18. So my last year, January, wasn't so good. This year's January is already looking great. I'm on track. I've got goals set for this year, which I expect to beat.
How many people are you hoping to help this year?
So I've set my goal for 100. I'd like to close 100 units this year. Yeah.
100 buyers, whether it's an investor or whether it's a first-time buyer or a move-up buyer.
Yep.
So your goal is 100 buyers. That's fantastic.
Yeah.
And I think the beauty of that is 100 people that you're hoping and I'm hoping that are happy.
Yeah.
100 happy faces is a good year.
It is.
I look at the goals and I say, how many people are happy?
Yeah.
How many of my clients ended up being happy? I don't care about the number is the number, whatever.
Right.
But what was my satisfaction rating?
Right.
From those
Absolutely.
buyers and those sellers.
I do, as an educator, I felt I always impacted people's lives, the lives of students, helped them to succeed in life, right? So I feel like in this career, I'm still doing the same thing. I'm helping people, I'm improving their lives, and taking that educator's approach, the teaching, I'm working with people and explaining to them throughout the process what's going on. Because, as you pointed out, this is scary. For somebody to go buy a house, it's the biggest investment most of them are going to make in their lives.
For sure.
So
99% of people will never do anything this big ever again.
Yep.
And we need to understand that.
You need somebody who's going to take...
We need to understand that.
Yeah.
We need to put that much emphasis on every single deal.
Right.
You on the lending part, me on the real estate part, we need to be that person.
Right. I always want to put myself in their shoes.
Yes.
If I'm them, who do I want working with me? I want somebody like me or like you.
Correct.
Hardworking, driven, knowledgeable, and communicates, right? Is available to them. I think that really helps to set me apart too, and set Nations Lending apart, is our availability.
Huge.
We're weekends, nights, cell phone numbers, calls, texts. I mean, you and I have been texting until 11 o'clock at night, 7 o'clock in the morning. So
you have to
be able to reach and somebody gets back to you in a timely fashion, that's huge.
And I think that was something that made me kind of where I am now, is that availability, the ability to deal with all clients no matter what. demographic, socioeconomic, whatever that background looks like,
Right.
treat every person the same.
Absolutely.
Every single person is as important as the next guy.
Right.
There's no one person that's more important than the other.
Right.
So I think with that, that's fantastic. Your goals are great. I hope you hit them.
Yep.
I cannot be happier that you're on the show.
Yeah,
it was
thank you.
my pleasure, my friend.
Greatly appreciate
Thank you
it.
so much. We really appreciate Nations Lending, and we
Yep.
appreciate working with you.
Thank
so
you.
with that, we are done.